Hi, I am Akshatha Udupa. Welcome back to my YouTube channel. In today's video, I am going to share with you all the best government schemes with zero risk and good high returns. Yes, you heard it right. Today we will be discussing those schemes in which you can definitely invest in order to get high returns. But here the risk is almost zero. You will not have to worry about the risk factor here, but you will definitely get very good returns with a small waiting period. If you are a trader, intraday trader, swing trader or an investor, that is in the stock market, you will definitely have to check in these schemes so that you can put some money in these schemes and balance your investment portfolio. It's always required for you to invest in some place which will have zero risk, so that even if something goes wrong in the stock market, you will definitely have a backup there. Life is so uncertain and you cannot just depend on your stock market investments for your finances, because we don't know what happens next. All your investments or all your trades will not go wrong, but it is also required for you to balance between your investments so that whatever happens, you will be in a proper position, that is financially you will be strong. Having said that, you might think we already have FDs where we can invest and balance our investments, but FD is not a great choice. You have better choices than FD, which we will be discussing today. Yes, FD is the safest means of investment, but with the same level of safety, with the same level of risk, if you are able to invest somewhere which can give higher return than the FDs, then isn't it a better deal? FDs definitely have low risk, but if you clearly analyze on a larger level, then on FD interest again you will have to pay taxes, and once you pay the taxes, your interest, that is the return that you will get, will be lower, and this rate of return that you get after considering the taxes is definitely lower than the inflation rate that is prevailing presently. So if you invest your money in FD, you are in a way losing your money, because you are not beating the inflation, and every day or every year the inflation keeps on rising, but your interest rates are lower than your inflation rates, which makes you poorer day by day. So it is very much important for you to select such investment wherein you will be able to beat the inflation. So now the schemes which we are discussing will give you a return which is higher than FD, which beats the inflation even after considering the tax factor. So let us check them out one by one. The first option that is available is the National Saving Scheme or the National Saving Certificate, NSE. So this particular investment have the same risk factor as the FDs. That means the risk is almost zero, but the returns that you get is slightly more than the FDs, that is around 7.7%. Even after considering the taxes, this NSE will beat the inflation rates, which makes it more functional, or which makes it more efficient when compared to FDs. There is a lock-in period for NSE, that is 5 years. You can remove this or you can withdraw this investment after 5 years of your investment. The interest that you receive on this investment is taxable at the normal tax slabs, like how your interest on FDs are taxed. But even after considering the tax rates, this particular investment will beat the inflation. So this is better when compared to FDs. Now if you want to do NSEs, then you can approach your nearby post office or any other authorized bank where this facility is available. So National Saving Certificates are easily available, and which is definitely with the perspective of returns is better than FDs. The next very useful investment scheme is SCSS, that is Senior Citizens Saving Scheme. Yeah, this is for the senior citizens. If you have observed in the FDs also, for senior citizens you will get 0.5% extra. Similarly, in the senior citizens saving schemes, you will get an interest which is 0.5% more than the NSE, which we already discussed. Yes, you will get an effective interest rate of 8.2% on the senior citizen saving scheme. Again, this interest rate is fixed. Yes, government will now and then slightly change the interest rates, but again that will not be a huge difference. So it will just do a small difference or small changes in this rate. More or less it is fixed. So with 8.2% of the interest rate, this is a very good or great scheme for the senior citizens to go about and save their money in. And here again there is no risk, the risk is very much minimal, and the tax rates are according to your slab rates. The lock-in period for this particular scheme is 5 years, and further it can be extended for 3 years. In this scheme, the lower limit is 1000 rupees per annum and you can go up to 30 lakhs. Whereas in NSEs, the minimum amount was 1000, but it can go up to any amount. That is, there is no limitation for your investment. The third scheme is the Sukanya Samriddhi Yojana. This is the best ever scheme for girls. This is available only for girls, and if your child, that is a girl child, is below 10 years of age, then you can go about and start this scheme, that is Sukanya Samriddhi Yojana, and the interest that you receive from this scheme is very much higher, that is 8.2%, which is more than any other schemes available. This scheme is absolutely risk free and it will serve the girl child to a greater extent. That is, you can get the money when the girl child attains 21 years, or if there is a marriage going on for that girl and her age is above 18, whichever is first. So the maturity period of this particular scheme is 21 years for that girl child or her marriage, whereas the age should be above 18 years. So whichever happens first, you can withdraw this fund and use it for that purpose. And also this amount can be withdrawn premature if there is some serious medical condition for that girl child, or if there is death of the guardian. In such exceptional cases, the money can be withdrawn beforehand. You can avail this benefit in any post office or in public sector banks or in SBI. And yeah, the minimum amount to be deposited is 250 rupees per annum and the maximum amount is 1,50,000 per annum. And another important part to be noted is the returns whichever you get from this particular scheme is totally tax free. So whatever return you will get will be exempted from tax and you will get a very good return of 8.2%. So if you are having a girl child who is below the age of 10 years, then definitely this is a scheme which you shouldn't miss. The next plan which we are discussing is the most underrated, that is Public Provident Fund. Yes, the Public Provident Fund is a very good investment opportunity which each of us will have to make use of. The return that is available in this particular scheme is 7.1%. Yes, it is definitely not very much high. In FDs, you will get somewhere around 7% return. Here it is slightly more, that is 7.1%. But the main catch is the return that you get from PPF is not taxable. It is exempt. If you take FDs, the interest that you get from FDs are taxable in the normal tax rates, that is slab rates, but the returns that you get, the interest that you get from Public Provident Fund is totally tax exempt. So it is very much useful, which if you compare FDs and PPF, definitely PPF is more favorable than FDs. The lock-in period of this particular investment is 15 years and again you can go on extending it for 5 years. And yeah, if you clearly observe, if the money is in our hands, we will spend it somewhere or others. But if you put it in the PPF, 15 years you will not be able to touch it. So after 15 years, it would be a great source for your income. The next important investment scheme which most of us ignore but which is very important and each of us will have to do it is a retirement plan. Your child cannot be your retirement plan. In today's world, money is very much important like happiness. So you cannot just say, I need happiness and I don't need money. That can never happen. Money is very important for each one of us. So it is very much important to have a proper retirement plan so that you will not be a burden on anyone. You can be independent even in your retired life. The most effective retirement scheme is a national pension scheme, that is NPS. This is mainly market linked, that is it is linked to the stock market, and whenever you see good returns coming up in the stock market, you will see good returns coming up here as well. If you select the auto choose option, then as your age increases, the scheme will get adjusted and majority of your funds will be allocated to the fixed return funds rather than to the equity funds. So these adjustments can also be done. So you can withdraw this money only after you attain 60 years. So there are again exceptional situations, but this fund is mainly for the retirement. So after 60 years, you will start receiving returns from this fund. and the returns might vary between 10 to 12% per annum, which is a very good return if you are in a retirement. So retirement fund is something which is to be given very much importance when compared to any other form of investments that we do. Even though you are a trader, even though you are an investor right now, do this retirement fund, so that when you are in the retirement time, you will be independent and need not worry about the income that you get. Definitely you can invest in the equity market, but along with that, if you are able to do this investment, then you can balance out on your portfolios. So these 5 investment schemes are the best investment schemes, and even if you are able to diversify some amount in each of this, in your difficult times, you will be able to manage your funds very effectively and your finances can be secure. So yeah, these are the plans which I had to share with you all. I hope you all consider this. So yeah, if you like this video, please don't forget to give a like, which is the biggest motivation for me to do more and more such educational content. If you have not yet subscribed to my YouTube channel, please subscribe and don't forget to press the bell icon. I will be back with another informative content very soon. Till then, take care. Bye bye.